Welcome back to Go Gaddis Real Estate Radio. My name is Cleve Gaddis, and I'm here to make real estate clear and simple and worry-free if at all possible. And if you want to connect with me, I'd love it. Go to gogaddisradio.com. That's GOGADDIS radio.com. You can ask questions, you can make comments, you can push back or challenge things we say, you can ask me questions, you can share ideas with us, ask us to do some research on your neighborhood, including at our neighborhood spotlight. Let's see what we've got on the agenda. We've got Windsor at Lanier, since we're doing Lake Lanier Islands for the Christmas lights. That makes sense. We've got that this week. You can also subscribe to our podcast, and you can subscribe to our YouTube channel. You can do all of that by visiting gogaddisradio.com. Let's talk for just a minute. I don't know if you heard, but Fannie Mae has made a significant change in terms of minimum credit scores. In the past, they had a minimum score of 620, and it could be, in fact it is, that minimum credit score is going away. Now, I don't know how you feel about getting a loan. I've gotten many home loans over the years for my personal use, also for investment properties. It's not unusual for me to have 4 or 5 or 6 of them at a time. And it's so interesting because it's not, the fear is not as great as it used to be. But I swear the first couple of times I applied for a mortgage, I just knew that I was going to get turned down. And that really bothered me because I never have been turned down, but to me it's like, hey, there's 10 boxes on this piece of paper, and the lender has to put a number in each one of those boxes, and whether or not my number matches the lender's underwriting system, that determines whether or not I'm going to get approved. And that just feels like a tremendous amount of stress. I know I talk to homebuyers constantly who the fear of getting turned down for their home loan paralyzes them. And I just want to encourage you that if that's the case, first of all, this news I'm going to give you from Fannie Mae is actually really good news for you, because it'll allow the lender to look deeper into your situation and not just judge you by a surface credit number. And I know some of you are listening and say, hey, credit number's not surface. See, it's a indication of, hey, but some people can have credit that was messed up a couple years ago, but they're really in a much better place. And those are the people I'm talking about, are people who are doing the right things, cleaning things up, moving things in the right direction. But maybe they had a hiccup, because the truth is life, gives us hiccups. There are many things that happen that are unexpected, and I think that's actually happening a little bit more often right now. So Jason in Norcross says his score's been stuck around 610 or 600. Does this new Fannie Mae change mean I might actually have a shot at buying a home? And I think the answer is yes. But let's just take a look here real quick. I want to first give you some details on the big credit score change, if you don't mind. I just really want to talk about what it means for you. So, ever wonder why your credit score seems to go up and down for what almost appears to be no reason? Or maybe you've been nervous that one number could make or break your chance at a home loan, like me. Well, here's some big news in the mortgage world. Fannie Mae just removed its long-standing minimum credit score requirement of 620 for loans run through its desktop underwriting system. So this means that lenders can now look at your full financial picture, not just your credit score, to determine if you qualify. So what does this really mean for you, and how much does your credit score still matter? Well, let's break it down. First, a little background. The 620 minimum score was basically the entry ticket, if you will, to getting approved through Fannie Mae's automated system. That's where they're plugging in all your numbers, and the computer is saying, yes, you're approved. If your score was below that, most people would typically just be out of luck, even if other parts of your financial story were really strong, like maybe your credit score is low, but your income is really high and you have lots of free cash flow. A lot of self-employed people wind up getting stuck in that where their credit score is not high enough, but they have tons of income and they wind up getting turned down, or they have to go to non-traditional lenders to do their financing. Now that the 620 barrier is gone, Fannie Mae's system can look much deeper. They can the system can focus on things like your income and your payment history and your savings patterns if you have lots of assets. Wouldn't that be cool to have a low credit score, but to have $100,000 in the bank, and because of that, boom, you get approved because the lender says, oh, this person has assets. They can solve a problem if they get behind. You can even get credit for the consistency of your rent payments. It's really all designed to make lending more inclusive for people who might have limited credit history, but solid financial habits, and maybe people who have some bad credit history but are doing better. So while your credit score still really matters, it's no longer the only thing that matters. Think of it as just one piece of a larger financial puzzle. But let's talk about credit scores in general. What makes up a credit score? Understanding this, I think, can give you an edge. And if you've already heard this before, then just listen in. You might learn something new today. And if not, then take what we're sharing and share it with somebody else, because most people out there do not know how it works. Your credit score is made up 35% based on your payment history. This is how often did you pay your bills on time, in full, and it is the biggest single factor. It is the biggest single factor. And I will tell you, 15% is the length of credit history. The longer, the better. So somebody who's 57 years old like me has a little bit of a leg up to having a higher credit score, because I've had credit cards since 1987. Also, your payment history going back a long, long time bodes well for you as well. So 35% is your payment history. 15% is your length of credit history. And again, the longer, the better. I love my little American Express card that says member since 1987. Helps me get a higher credit score. So we're at 50%. 30% is credit utilization. That's how much of your available credit you're using. So now you're at 65, 80%. Then you have 10% comes from new credit inquiries. So if you have too many inquiries, it can push your score down. And then the final 10% is credit mix, which is having a variety of accounts like credit cards and auto loans, and mortgage can also help you. So 35% payment history, 30% credit utilization, 15% length of credit history, 10% from new credit inquiries. Anytime I get a new card, I love my Delta credit card. I love my Marriott credit card because I like to get points. And I know Dave Ramsey would, they'd have to put him on life support if he heard me say that. Never do I have even one dime balance carried from one month to the next. I promise you, Mr. Ramsey, I do not do that. But I do use my credit card because I do like those miles. Do I spend a little bit more money because of it? Maybe. Again, 35% payment history, 30% credit utilization, 15% length of credit history, 10% from new credit inquiries, and the final 10% is the credit mix. So even though the rules are loosening, good credit habits still really pay off, like literally. This move by Fannie Mae could open doors for more first-time buyers, especially those who've been working hard to build a stable financial foundation, who don't really have perfect credit, because, I mean, sometimes things just happen, as I mentioned before. This is a change that is happening in mid-November, so timing matters. Loans submitted after that date can benefit. Those locked in earlier, however, may still be under the old system. So if you were thinking about buying a home or refinancing or anything, and you've been sitting on the sidelines because of a lower credit score, this might be the moment to take another look. Talk with a lender. See how your full financial story stacks up and find out what's really possible. Because at the end of the day, your credit score is really just one chapter. It's not really the entire story. And for those of you who are out there who are thinking, man, I would love to have a conversation with a lender that would allow me to understand exactly where I am, my whole credit profile, exactly where I am, and if any steps are required, the specific steps to get from here, where we are today, not being able to qualify, to being able to qualify for a mortgage. And because of that, we've created, in partnership with Southeastern Mortgage, a program called the Get Ready Guarantee. And it is real simple. Now, it doesn't guarantee that you will be ready. It guarantees this, that if you'll spend 30 minutes on the phone with a lender, give them as much information as possible, and that's Matt Scout, the gentleman that many of you hear on the radio with me once a month or something like that. If you'll spend 30 minutes with him, he'll get all of your information, and within 24 hours, he will give you a written plan that shows exactly where you are today, exactly where you need to be in order to get the best rates and terms, and then very specific steps to get from A to B. Doesn't that sound exciting? And I'm going to be honest with you. If you are right now thinking, I would love to buy a house, but I am absolutely positive there is no way I would get approved for a loan, Don't wait to have that conversation. And I'm not saying don't wait because you might be able to qualify and can buy one now. I'm saying don't wait because if your situation is not the way it needs to be, then wouldn't it be nice for you to have a written plan to follow? We need to do all of these steps or these 3 things or this one thing or pay off this debt or whatever it is to get from here to there, because they can do some modeling and say, well, if your credit score, let's just say you wanted to get your credit score up to a 760 so you get the best possible rates. I don't know if that's where the cutoff is. I'm just using that as an example. Then Matt, through the Get Ready Guarantee, could tell you exactly what you need to do, the changes you need to make in your financial profile, in your credit history, and all of that, in your debt-to-income ratio or your amount of debt being utilized. He can tell you everything you need to know to move from here to there. So if you're interested in participating in the Get Ready Guarantee, it's no cost, no obligation whatsoever. If you decide not to use Matt for your mortgage, it's no problem. You can take the information and use it with any lender you want. Just go to GoGaddisRadio.com. That's GoGaddis Radio.com. Click on Contact Us and just type in Get Ready Guarantee, and we will make sure and get your information directly to Matt Scout, who will do that for you free of charge. If you're thinking of selling your home in any time in the next 12 months, we want to make sure you get the upside. There's so many ways to sell a home today. And the way that's right for you is not the way that's right for everybody else, meaning it's not a one-size-fits-all, even though in most cases everybody does everything the same way. And that kind of hurts me because your situation, your family, your needs, your desires are all uniquely yours, and they don't have anything to do with anybody else. Go to GoGaddisRadio.com, click on the upside, put in a little bit of information. I'll reach out to you and do pricing for you in all 4 models, all 4 ways to sell a home so you can determine what is the upside for you. Again, that's GoGaddisRadio.com. Click on the upside, put in a little information. You'll be on and off the page in 45 seconds as my guest, and we'll reach out to you. No strings, no cost, no obligation. We're going to take a quick break. When we come back, I'm going to give you my opinion on the 2025 real estate soft landing and what I think is going to happen in 2026. Stick with us. We'll be back.